Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES came down towards 2021, and we had the overall bull bear zone at 16 to 19, and ES ended up holding essentially above it and then reversing the afternoon sell-off from yesterday. So at this point, heading into the open, we know that the buy side is firmly in control, but at the same time, there's no catalyst remaining on the day time frame to really drive the market big from here on out. So on the upside, we have yesterday's high at 49.25, followed by the initial resistance zone at 52.75 to 54.75, and then the overall balance area high at 60 to 62.5. So the idea is that from here, the market can quite easily go up and test 49.25 and 52.75 to 54.75, but we could easily get responsive sellers active at that zone and then simply balance in a range, because the next main catalyst is the employment report due tomorrow morning. So today could be a very balanced type session. So that means, you don't want to buy at an extremely high price and then your target's only 3 or 4 points away. So you want to wait for a pullback and then look for a long setup, because buying it at a extreme high or near the overnight high is a riskier play, just because there may not be enough left in it to really justify that trade idea, and you'd probably still have to use a 2.5 or 3 point stop to get involved. So on the downside, the pre-market support 37.75 to 20.40. That's a good spot for buyers to be active, and as long as we hold above 37.75 to 40, we know that the buyers can maintain strong control, and we can simply balance above that area and then actually go up and tag 52.75 to 54.75, potentially 60 to 62.5 if there is really very strong buying, but that would be a range extreme. Below 37.75, it would signal some short-term weakness. It doesn't mean that the market's going to reverse. It just means we're balancing in a bigger range and just putting in a deeper pullback. So below 37.75, we have support at 32.5 to 33.5. And then finally, 27.5 to 30 is a spot where the selling could shut off, and then buyers can be pretty aggressive at that zone. And again, the S&P can just balance from there on out. Bigger picture, we're using 18 to 21 as the overall bull bear zone. That's quite far away right now, so it's not really in focus. But as long as the market holds above that, on the larger time frames, we could still see higher prices. So right now, heading into the open, the main area to focus on is 37.75 to 40, and on the short side, you don't want to necessarily short it right here either. You want to wait for a range extension up to either 52.75 to 54.75 or 60 to 62.5, and then those could still be good short setups as well, because the probability of the ES trending on the day time frame today is pretty low. So the overall expectation is balance ahead of tomorrow's employment report, and it's simply going to be a matter of identifying where the market can balance. If it's quite strong, then it can balance between pre-market support and initial resistance, maybe a little higher. And if it's a little weak, then perhaps we get a deeper pullback and then start balancing within a range. But the overall expectation is two-sided market, but understanding that the buyers are the ones that are firmly in control here. So if you're going to take any trade, any aggressive trade, I would rather do it on the long side rather than aggressively shorting a market like this. On the short side, ideally you want to wait for good trade location, initial resistance, or the zone above it. So those are the main ideas. Let's see how well the buy side holds it up this morning, and we'll take it from there.